Welcome back. In our last recording, we had a look at what different types of books of prime entry are and how they fit into the accounting system. Well, now what we need to do is actually look at what the books of prime entry look like and how we post from books of prime entry to the ledger accounts. So the first thing we're going to have a look at then is the sales day book. And if you remember, a sales day book is just a list of invoices we send to our credit customers. So in other words, what this does is it lists credit sales to our credit customers. Now, when we're thinking about credit sales, we're selling goods to a customer, we're giving them an invoice, and they're promising to pay us later. And the sales day book does just that. It just lists those transactions into essentially a day book, which is just a list. So let's have a look at this then in your notes. We can see then that we've got several columns along the top for a day book. The date of each invoice that we send to our credit customer. Don't let the word day fool you, okay? You know, it depends on the size of business as to, you know, what the date range is for your day book. You know, if you're a large multinational company, you might have a day book listing all your transactions for one day. But in this case, you might have a smaller business where you're listing invoices for the week. Okay? It's up to the business to decide, you know, how often you're going to prepare these day books. But in this case, we're just listing them for 1 week, which is absolutely fine. Invoice number, so the invoice number that we're going to send to each customer. Notice these are in numerical sequential order, so that's showing that we're issuing the invoices ourselves, and each time we issue an invoice, we're going to record it in here first. We've then got the name of the credit customer who we are invoicing and sold the goods to. And then we're going to have 3 amounts. The net amount, do you remember from our last chapter, that was before sales tax? The sales tax amount, or the VAT, the value added tax. And then the gross amount, the amount after sales tax has been charged. Okay? And ultimately the amount the customer has to pay to us. So we can see then for each customer we're listing out their invoices that we've sent to them, the net, the sales tax and the gross. And then can you see that we're posting a total at the bottom? Okay, a total of those 3 columns. Now, when we post to the main ledger, we post to the main ledger from the totals only. Remember, the main ledger is where you see your ledger accounts and you do your double entry. Refer back to that diagram I showed you in the last recording that we did. Now, posting to main ledger will always be from the totals. Okay? So when we're posting the debit and the credit to the main ledger, we always post it using the total figures. So rather than doing 4 individual debits and credits for each individual customer, what we're going to do is we're going to post the total, or the sum of those 4, okay, into the main ledger. It's just so we keep the ledger accounts nice and clean and easy to read. Okay? So the net amount of goods that we've sold on credit to our customers. Can you remember which account the net figure of sales goes to? Well, in the last chapter, do you remember net before sales tax goes to our sales income account? Okay. And what we're doing there is we're increasing income, so we're going to credit and increase our sales income account. Okay. But rather than doing it 4 times over, we're just going to post it with the 700, the net total. Now, do you remember then, with sales tax, If we're selling goods, remember that's output tax, that's not our money to keep. So do you remember we have to increase our sales tax liability account? And do you remember that was a credit entry as well? We called that sales tax control. Okay, so this is really just following on from the previous chapter. So we're going to increase our liability of sales tax control. We're not going to post 4 individual credits. We're just going to post one overall total. Again, makes our accounts a lot easier to read. Now, what about the gross total then? Okay, where do you think that's going to go? Well, it's the amount your credit customers owe you. So we're going to debit our trade receivables and increase our asset because we're owed that money from our customer, the gross amount. But again, we're not going to do it every time we send an invoice. We're going to post it from the total. Okay, makes the accounts nice and easy to read. Now, because we're posting the total now rather than individual transactions, from now on, the receivables account in the main ledger will now be called the receivables control account. Okay, so receivables that we show in the statement of financial position will now be called the receivables control account. It's the same thing, but the control account is going to show overall receivables that is owed to us. But it's hard to see from the ledger accounts who owes us that $805. So although that's great posting to the main ledger, by looking at the receivables control account, your credit controllers, the people that you've employed to chase your outstanding debts, wouldn't be able to see who they need to phone up and chase for that money. So as a result, to maintain control over our credit customers, our receivables, we've got to break down that debit of $805 into the control account, into the subsidiary ledger. Okay, remember we talked about that in the last recording. Remember, the subsidiary ledger shows individual customer accounts. So, if we post it to the control account, we've also got to break down that debit of $805 into 4 individual debits. Okay, we need to debit customer Chris's account with $287.50 to show that Chris owes us that money. We need to debit customer Neil's account with $345. We need to debit Carly with $115, and we need to debit Amy with $57.50. And those individual amounts will be posted to the subsidiary or individual ledger. Okay. So we're going to break down that $805 debit in the control account into 4 individual debits into each individual customer account. Okay. And that's why the subsidiary ledger is single entry. Anything you post into the control account in the main ledger must now also be broken down into each individual customer account as well. So, what I thought would be useful is to actually do these postings. The postings to the subsidiary ledger and the posting to the control account for receivables. Okay. So, this is going to be an illustrative example, okay? So although it's not an example in your notes, it is going to be an illustration. In your notes, you should find some pro forma ledger accounts in this chapter. So if you flick over maybe a page or so. And you'll see then that it will be headed up. The main ledger, you'll see that you'll have a receivables control account already drawn up for you. And it'll look a bit neater to what I've done on the board. I always like to draw my own. And then can you also see that you've got 4 mini accounts, which is going to be the subsidiary receivables, or sometimes known as sales ledger. And can you see then that you've got 4 little accounts for each individual customer, Chris, Neil, Carly and Amy. What we're going to do is proceed to fill in these accounts from the data from the sales daybook. And this illustrative question, or this example, is going to be a common theme through the next several recordings for this chapter. We're going to use this and fill this in up until we get to the cash payments book. Okay? So we're going to use this example for the next few recordings, so do make sure you keep this page handy. Now, we said from the sales daybook in your notes that we're going to post $805 on the debit side of the receivables control account. And that's precisely what we're going to do. So, we're not worrying with sales or sales tax because we dealt with that in earlier sessions. The focus of this really is the effect on receivables. So, from the sales day book, we said we were going to debit $805 to the receivables control account in the main ledger. And if you were to balance off this account now, you would show $805 under current assets in your statement of financial position, because that's where this ledger account is going to end up, trial balance financial statements. We then need to say who owes us that $805. Well, 4 customers do. So, in the subsidiary receivables ledger, sometimes known as sales ledger, we're going to break down that 805 debit into those 4 individual customer accounts. So can you see here, we're going to debit $287.50 to customer Chris's account in his individual ledger. So customer Chris, from the sales day book, I'm just going to abbreviate that to SDB. Customer Chris owes me $287.50. Okay. So we're saying of that $805 that we've posted to the control account, Chris owes me that amount. We're going to do the same for Neil, Carly and Amy as well. Break down that overall total gross amount to the control account into 4 individual gross amounts as well. So, customer Neil, sales day book, he owes me $345. Notice what I mean by the single entry. You're not doing a debit and a credit, just a debit. So the subsidiary ledger is not part of the double entry bookkeeping system, and that's why it's away from it. If we then look at Carly and Amy, Carly's sales day book, we said that she owes us $115 gross, and Amy from the sales day book, well, she owes me $57.50, again, the gross amount. So you have your sales day book at the top, you post the total from the sales day book to the receivables control account in the main ledger, and that's where your double entry will take place, and that's where your financial statements will be posted from. And then the breakdown of that debit to the receivables control account will then get posted to the receivables ledger. So let me show you that diagram we did in the first session of this chapter. The total from the sales day book gets posted to the main ledger, and the individual gross amounts will get posted to the subsidiary or individual ledger, which is single entry. Again, keep this example that we've just done handy. You're going to need this for several recordings after this, essentially for the rest of this chapter. Okay, so we're going to continue to fill this in once we've had a look at more day books. But we've finished the sales day book now, and we'll proceed on to the purchase day book in the next video. Thank you.